Hi guys, Ken Chigbo, aka Ken FX Freak, and I'm back with another week roundup and look ahead to the key events. Now, starting off with last week, quick recap. Dollar actually finished in the red, as you can see here, closing in the red. Obviously, we've been sort of choppy for the past few weeks, lack of direction, consolidating. Now, I think there could be room for some pullback. Why? Well, if you look, the pullback actually started occurring after the FOMC meeting minutes on Wednesday, where, look, they're obviously edging towards bringing back their QE, but they lacked specific timing, okay? When exactly are you going to do that? So with the lack of clarity there, a little bit of disappointment for the markets and allowing for a dollar correction, a little bit of pullback after all this huge pumping following. Remember that where we had the actual meeting and they were very much hawkish, positioning the market for action to come. So I think we've got room for a pullback here for the dollar. Just marked up the swing low down here from the back end of May up to the swing high here, the 5th of July. And got the 38.2% Fibonacci to keep an eye on for potential area of support. Similar to what we saw here in March 2021, breakout, pullback around the same sort of area, and then buying to come into play. Just another thing before we look over at some other things. Two things, how many times am I going to say things? Two factors to keep an eye on this week, or events rather. We got Jerome Powell, the Fed chair, speaking, and he's going to be testifying. And I think he's going to likely give us a bit of a dovish tone. I say why? Because inflation. Remember, had been rising, but it's expected to cool. And that's another thing we're looking at for this week, which is US inflation, we're expecting that to come back down. And remember, the FOMC warned us that, look, they're not going to rush to raise rates just because, or withdraw stimulus just because inflation's rising. And they said it's only due to transitory factors. Temporary factors, because the economy reopened, everyone's going out, going shopping, spending. But it should cool now, and that's what we're expecting. So that could mean he cools the markets down about any sort of tapering for now until things look a lot clearer. So I think for this week, in a nutshell, I'm looking for dollar downside, okay? Initially, Euro's got some room to break out here. You can see how price action was moving within this sort of descending channel structure, this wedge, and now we've got room to break out. And it's very reminiscent, really. If you look at this price behavior here, look, we've had a pullback into sort of up to 1980 before that big selling comes into play. Obviously, we had a big buying area here at sort of 1770, but I just don't feel into sort of 1700. I just don't feel like the selling's done yet. I think we need to pull back towards that psychological 120 before selling comes into play. Gold obviously taking advantage, just loving the fact that the FOMC are remaining, lacking clarity. And remember, gold loves QE. Gold loves low interest rates. So breaking out of this pennant structure, there's a lot of supply around sort of 1810. Watch out for a little pullback to test this zone, but then we should use it, for me, as a launch pad in towards sort of 1840, towards that mid-1850 region. Now, another thing to keep an eye on this week, we've got NZD, RBNZ rate decision. They should be quite optimistic about the economy. Things have looked strong. Business optimism, we saw that rising drastically last week. So the bets for rate hikes are ever increasing. So we could see some nice bit of upside for NZD. You can see the way, look at this sort of 69, mid-69 regions protected. Look, big buyers. So watch out for some optimism from the RBNZ. Should rocket launch the NZD, New Zealand dollar, before, obviously, then I'm looking for the dollar to regain momentum at some point. I don't think it'll be next week. It may be the week after, but just keep an eye on that. And then lastly, obviously, US 30, really enjoying some upside moves here. It's been great, actually, the US 30. Just dips, just continues to be bought. Any dips that we see. And why is that? Because remember, the FOMC as well, lacking clarity on when they're going to withdraw the stimulus. Stocks love stimulus because people got all this cash and they're going to go and spend on these stocks, on these goods and services. Keep an eye, really, on this 34,800 area. It's been big supply. We want this to hold, this little retest here, and then we're going to go and print new highs. We'll dwarf these. We'll likely push through that back into sort of 35,100. So that's everything I'm looking at for this week. Guys, do not hesitate for trade ideas, fundamental analysis, technical analysis, education. Check out Freak FX Trading. I've been doing this for over a decade. And in terms of BluFX, an amazing solution, very good friends of mine, very strong system to help you become an all-rounded trader, good risk protocols in place. And obviously, if you prove your worth, prove how good you are as a trader with the right discipline there at BluFX, you're going to be given more capital. Have an amazing week. Let's get it.